Hey everyone, this is the Halifax Real Estate Podcast. My name is Jason Paul, and I'm a licensed realtor on the Jamie Green team at Keller Williams Select Realty in Halifax, Nova Scotia. I'm here to help you gain a better understanding of real estate in Halifax and to introduce you to a wide variety of wonderful people that work in or with our industry as well. Our inaugural guest is Brad Wadden, owner and operator of the Mortgage Center on the St. Margaret's Bay Road in Halifax. Brad has been working in the mortgage industry since 2001. Working with H.S.B.C. until 2007 when he opened the Mortgage Center, and he's been there ever since. Please welcome Brad Wadden. Hey Brad, how are you doing?
I'm well, thank you.
I just want to say thank you so much for coming on as our inaugural guest. You have no idea how much I appreciate it.
My pleasure.
I guess we're just going to get right into it. So what is a mortgage?
A mortgage is the name of a loan product used to purchase a home. The loan is used to provide buyers the money to buy the house, and the house is used as collateral.
Now, when a lot of people, first-time home buyers particularly, they don't really understand or know much about mortgages and where to go. Whenever I'm sitting down with a first-time home buyer, I always tell them the first step to buying a home is financing, going to your bank or mortgage broker and getting a pre-approval. Yeah. So what is a mortgage pre-approval?
Well, when I do a mortgage pre-approval, I get some information from the customer, the date of birth, their SIN number, their annual income, their savings, investments. I take all their data, put it in my system, and then I run the numbers, and basically I can tell them what they're pre-approved for. Okay. So at that point too, we run some numbers, we break down the closing costs, down payments. I show them what the monthly payments are. Just basically explain the whole home buying process from start to finish.
Yeah, of course.
Yeah.
Now, I understand that when you get someone gets pre-approved and then they buy a house, right? Yeah. Does that house have to get approved again by the bank because through financing, or is it just a pre-approval good for it?
Well, no, the pre-approval means the client's good for the money. Okay. And then every property is case by case. So if the client's not putting down 20%, they're going to be going to a mortgage insurer. So the lender approves the property. I submit the purchase and sale up with the property details. The lender approves the property. They send it to the mortgage insurer. 99 out of 100 times or 95 out of 100, the place comes back approved. Okay. And sometimes there might be issues.
Somewhere down the line.
Well, maybe the value, maybe the mortgage insurer knows something about the property. Maybe there's mold. I don't know, right? So.
Yeah, case by case.
Yeah.
Okay. Actually, you got into my next question. High ratio mortgages versus a conventional mortgage. Okay. What is a high ratio mortgage?
It's funny. Most people, when they ask me what a high ratio mortgage is, they think it's a high rate mortgage, but that's totally not the case. So, well, it makes sense though, right? If you're not a home buyer, what do you don't know that much.
I understand.
Yeah. So a high ratio mortgage is when you don't have a 20% down payment. Okay. Which is most people when they're buying a house. So there's 3 mortgage insurers out there: CMHC, Canada Guarantee, and Genworth. So if you don't have a 20% down payment, after the lender approves you, they send you to one of the mortgage insurers, and they insure your mortgage, so you can purchase the house at 5% down payment or 10% or 15%. Okay.
The mortgage insurance, is that an extra cost?
It is a cost. It's a one-time lump sum that's added to the mortgage balance.
Okay.
Yeah. Now, so and everybody's like, wow, it's at a huge number. And yes, when they look at it, sometimes the insurance premium, the CMHC fees are $10,000, $12,000, but people get kind of scared of that. But right now they're paying rent, so. I'd rather own a house and pay a little CMHC fees, especially with these super low interest rates, than be paying rent every month and not getting any equity from that, right?
Yeah, mortgage rates are an all-time low, correct?
They are, yeah. The 5-year fix right now is 199 or less, and the 5-year variable is 194. So, yeah, no, the rates are. I never would have thought I'd see the 5-year 6 below 2. So.
Well, there we go. COVID.
Yeah, no, it's a weird year for sure. So
you touched on something I want to go to next: down payments. Now, a lot of people a lot of first-time home buyers struggle with getting that money together. Yeah. You need an initial 5% down for a down payment. Is there other ways to cover the down payment rather than just having it saved in your bank account?
Well, for down payment, source of down payment, there's own resources, obviously savings, investments, RSPs. Could be trust fund. Could be a gift from your parents. You can also borrow it off a line of credit card if you had to. There's also lenders that will build in the no down payment in the mortgage, but that's at a higher interest rate. Okay. And lastly, Nova Scotia, our province, has the down payment assistance program where you can actually get an interest-free loan if you qualify for up to 5% of your down payment to cover. You got to pay it back over 10 years. It's a great deal.
Yeah, that's all. It's a 0% interest free loan, right?
It is, yeah.
And to qualify, you need $75,000 like maximum of the household income.
Yeah, you can't. It's 75 grand or less, and it's
Yeah.
and it's tiered. So
Yeah.
if you're under 65 grand, is where you get the biggest bang for your buck, sort of thing. You get the 14 grand.
Oh, okay.
But it's tiered too. Also, like Halifax region gets a bit more than the rest of the province.
Yeah, at HRM we can get up to $280,000 for a home,
Exactly.
correct?
Yeah, the 14 grand, which is 5% for that.
And you need to live in Nova Scotia for a year, and you also need to be pre-approved for a mortgage, of course, to be able to.
And you need to be pre-approved for a borrowed down payment. You need a credit score of at least 650.
Okay, that's important.
It is. Yeah, you got to pay your bills.
I guess closing costs would be the next best thing, because not a lot of people know about closing costs and understand that to buy a house you need to close.
Yeah.
So what are closing costs?
Well, there's our beautiful province of Nova Scotia has land transfer tax, and in HRM it's 1.5%. So you buy a house for $300,000, there's $4,500 right there in costs. Okay.
Yeah.
And then you got your $1,200 for lawyer fees, roughly.
Okay.
The $1,200 is probably like a $750 lawyer fee, plus there's disbursements and a deed and all kinds of other costs too. And then you got your property tax adjustment and your inspection, your sewer inspection. So.
And you go through all that stuff with the client as they're going through pre-approval.
When I do the pre-approval, I show them all those numbers. Yeah.
Yeah. Okay.
Give them a heart murmur, scare some of them away, but it's better for them to know at the start than when they get to the lawyer's office and they're short $4,000.
Do you scare a lot away?
What? No. Well, they need to know though. It's not, you know what I mean? It's their finance, it's their future. You can't.
Of course, you need to know.
Yeah, like if someone can't afford a $350,000 home because of the budget, buy a $250,000.
Of course.
Yeah.
Now, that's why you're the first guest, is to go through the financial side of things, because it's so important to know.
It is for sure.
I guess my next question would be the purchase plus improvements, and the reason I'm bringing up purchase plus improvements is because just the way the market is right now in Halifax, as you know, we're in the hottest market probably in a decade, maybe longer.
Oh, I'd say this is the hottest market Halifax has ever had.
Yeah.
Yeah, I would say.
Yeah. So I mean, a lot of people trying to buy a home right now are struggling to find the right home because so many homes are going competing offers. Yeah. So a great strategy I've been recommending to a lot of clients has been to find something that's been in the market for a little longer, like looking at homes that 20, 30 days on market. They might need a little work, but the purchase plus improvement plan for a mortgage is a great way. So what is purchase plus improvements?
So purchase plus improvements is it's a mortgage product out there where you can add value to the property. So let's say you buy the house for $300,000 and you do an inspection and the roof's shot and you want to put a kitchen in and et cetera, and you get some quotes, okay? And the work is $30,000.
Yeah.
So then I take the quotes for the $30,000 with the purchase plus or with the purchase and sale, and I submit it up to the lender and the mortgage insurer as a purchase price of $330,000, which is the combination of both.
Yeah.
All right, and then typically the mortgage insurer. I shouldn't say typically. The mortgage insurer will review. Sometimes they auto approve it. Sometimes they want an appraisal to make sure that the $30,000 of renovations add value to the work. Okay. After that's all done, the deal closes. The lawyer holds the $30,000. Customers don't get that in their hand. Okay. Once the work is done, the lender sends an approved inspector out to confirm the work is done, and then the lawyer is to release the funds to pay for the work.
Okay.
So it's a great product.
But people have to pay the money up front first, right?
Well, or in most cases too, the contractor can float it.
Okay.
Because he might have credit with his wholesalers or suppliers.
Yeah.
And half of it's labor, right?
Yeah, of course.
Yeah.
And like I was saying, the reason it's a great strategy is so that in case a home needs a bit more work, here's a strategy that's built into your mortgage.
Yes, absolutely. Like some people are scared of it, but then they put $12,000 on a line of credit. You know what I mean, though? And then you're paying on the line of credit instead of adding it to the mortgage and adding $30 a month to your payment.
Yeah.
At 1.99%, it's much better.
I never even thought of it like that. Just put it on the mortgage right now at today's rates anyway.
Yeah, but why would you put it on a line of credit when you can put it on your mortgage? It's lower money, and it's investment into the property though. It's good money.
Yeah, it's a great strategy. Something that a lot of people should know about.
Absolutely.
I suppose the next question I've got is, what are when you're working with a first-time home buyer, what are the most frequent questions you get?
Well, to be honest with you, a lot of them are lost, or some of them are. It's a broad spectrum. Some of them don't know much, some of them know a ton. So, for me, I answer some preliminary questions, but I try to get their information plug it into my system, and then I send them a detailed email with a bunch of that data that I was telling you about.
Yeah.
And that probably answers most of the questions they have, and then we go from there.
I guess I'm going to go back to the down payment assistance program.
Yep.
Because I forgot to ask, how do people apply for that program? Like, say someone wants to use it, and how do they actually have to go about applying for that?
They got to go to the website. The province has a website, and there's
Yep.
a list there's a step-by-step thing. So
Okay.
you got to gather some income documentation, like your pay stub, letter of employment, your T4s. You got to get the purchase and sale. You got a copy of your approval from the lender. You got to go down there and sign with the commissioner oaths
Okay.
to confirm you never owned a property before.
Oh, yeah.
Yeah, they have a list of stuff, but most of the documentation they want ties into the mortgage approval anyways. You got to get me your pay stub and your job letter and all that stuff.
Yeah. You
So-
mentioned the purchase offer. So you have to have an accepted offer on a home.
Absolutely. Yeah, the province doesn't do pre-approvals for that product.
Okay.
Once you have an accepted offer for it, they'll start the process.
Okay. And how long does the process usually take?
I had a client go down there last week. She called and they told her it was going to take 5 to 7 business days, and then when she got there, it took 48 hours.
So,
So
okay.
it's all, but I'm not. Who knows?
Yeah,
What the next one.
it's the government. You can never know.
It's timing.
Yeah.
Well, you know what I mean. They might have 4 one day, or your client might go in and be the first.
Yeah. I guess that makes the most sense.
Yeah.
So what income documentation do you need for a mortgage?
Okay. We'll go through salary people first.
Okay.
So if the client's salary, just a letter of employment and a pay stub
Okay.
works. Okay. Typically, now this year with COVID, if the client worked through COVID, if they're still working the year to date, it's going to show that on the pay stub. The lender will probably do a verbal job check. Everything will be fine. Now if you're laid off because of COVID, even though you've been there for 8 years, you can't get a mortgage right now.
Even if you're on CERB.
No, you got to go back. You got to wait till you go back. Okay.
Okay.
Yeah. Now hourly's the same thing. They're going to want to see your year to date, your letter of employment. Okay. So, there's a lot of people that COVID hasn't affected. They're still working, still making their money.
I mean, that's why the market's so hot.
Yeah.
It's because COVID there's so many people that still were able to work. And
Absolutely.
Get
Yeah.
pre-approved.
Now for self-employed, typically they need 2 years tax return information, like notice of assessments, T1 generals, statement of business activities. And if you're incorporated, they want to see your articles of incorporation. Now that's typical. Okay. They want to see a 2-year average. Now this year, due to COVID, they want to see a whole bunch more. So they want to check your bank statements, see your receivables, make sure you're still in business, et cetera, et cetera.
Oh,
So,
okay.
Yeah. Everybody's income's getting dissected way more than it ever was before.
Really?
Yeah.
So pre-approval is now more rock solid than
Well,
before?
for me too, I get the income up front during the pre-approval, so I validate it. So,
Oh, okay.
Yeah.
So
But don't get me wrong, if you're working and everything's fine, you're going to be approved. But if your hours are reduced and you're not working all the time compared to previous years, it's going to affect your buying power.
yeah.
And if you're on the CERB, you're not getting approved.
No chance.
No.
Just gotta wait till you go back to work.
And now the CERB's ending soon, so it's going into an EI program, so that's going to squash anyone getting approved as well.
Oh,
So
yeah.
you got to be working.
Yeah, you gotta be working like a stable job. Of
Yeah,
course.
for sure.
Okay. Now, I guess you brought up the market, which, as we know, is the highest as we've ever seen before.
Yeah.
How are you finding the market as a mortgage broker?
Well, it's my job's great right now. Interest rates are super low. They're below 2%. People are happy. Pre-approvals, they're qualifying for a good amount. The qualifying rate just dropped too, so that's great for the buyers. That's great. But I have a lot of customers that are getting in bidding wars.
Yeah.
They're bidding 30, 40 grand over the asking amount, and they're not getting the property. So they're getting frustrated on that end. So I find it different this year. Like this is the most pre-approvals I've ever had in August.
How many do you have?
I over 20 for sure.
You have over 20 clients pre-approved looking for
and
a
like I
house.
said, they're because of bidding wars or whatever, or limited supply. But
Are you having a lot of clients bid over what they're pre-approved for?
no, I'm very thorough. Like I said, I'm very adamant when we go through the numbers, I make sure they know what their maximum is.
Yeah.
Like,
So you
to
haven't
the
had
point,
anyone just get really too aggressive and
No.
okay, good.
Yeah. Well, as I said, you can't be doing that. They're wasting their time, the realtor's time, and it's not going to work. It's not my rules. I'd love to prove everybody. If you're approved, I get you a mortgage, I get paid. I'm on their side, right? But they
Yeah.
don't realize that when I say no, we can't do that. The math doesn't work on the numbers. So.
Yeah, that brings me to my next question. when someone's working with you, Brad, as a mortgage broker, does the customer pay you?
No.
Or how do you get paid on a deal?
The lender pays Mortgage Center, which is my employer.
Okay.
And then Mortgage Center pays me. There's no cost to the client at all. It's free service.
You're a free service.
Yep.
And say someone's thinking about buying a house a year or two from now. Should they be talking to you now, or should they wait a year or two now when they think they're ready?
If they want to touch base now, once again, I can run the numbers for them and show them what it looks like and show them a budget for savings and stuff and all that too. Whatever works.
Yeah.
No pressure for me. So, but yeah, sometimes I work with clients that, they put a plan in place. It might take them, a year and a half to save, but they do it. That's fine.
Yeah. What kind of plans do you put in place for people?
Well, we just go through their pay and just go through a budget and see what's practical, what works for them, what they can save per month, and just start doing it.
What about credit score? Like, do you help people build their credit score and coach them through that?
Well, yeah, if there's something wrong with their credit, I'm going to show them, like, hey, Jason, your credit card's in collections. Not going to fly. I'll just help them. Or no, not just, that's an example, though.
Yeah.
Or, if their credit card's over the limit. Like, typically, if you're over 75% the limit of a credit card or a line of credit, it negatively impacts your credit score.
Of course.
So, you come see me, you're over the limit on 4 credit cards, and your cell phone bill's past due. I'll be like, pay your cell phone bill, get all your cards down, and we'll look at this again in 180 days.
Yeah, of course. Now, I'm going to bring up first-time home buyers because they're just such a great topic.
Yep.
And the reason why I'm bringing them up is because whenever I'm working with a first-time home buyer, when they go to get financing done, 9 times out of 10, they say, I'm going to go to my bank.
Yep.
And I always try to push them towards you or a mortgage broker that they may know in their circle. What's the difference between working with someone's bank on a mortgage or working with you on a mortgage?
I'm not going to bash banks or anything.
I'm not saying to bash.
Yeah. As a mortgage broker, we have access to 50 competing lenders.
Okay.
So when we sit across from the customer, we're going to offer them the best we have. We don't have to sell one lender's products, like the bank XYZ's products. So
Yeah.
And typically we can get a better mortgage product for them with better prepayment privileges. So
Okay.
And but like I said, the banks are great too. I guess I'm not going to slag them. So.
No, we're not here to slag anyone. I understand that banks can only go and sell their own products.
Yep.
Yeah.
And when you're working with a broker, it's non-biased because we don't have to sell one lender's products. Too,
of course.
Right? So, and when I worked for the bank and the finance companies, I could only sell what I was paid to sell.
Yeah. So. At least now you're working for the client, would you say?
Yeah, for sure. Well, that's actually the Mortgage Center slogan. I work for you, not the lender. So sounds, it's whatever, but it's the truth though. We do.
Yeah.
And there's no cost. So it's a good value added service, I feel.
Yeah, of course. It's always better to be able to shop around and get the best rate you can.
Yep.
Because, and even like you and I have had a client in the past where we put them through you and actually their bank came back with a really sweet offer.
Yeah.
And they've actually decided to go to the bank because the bank gave them, I think it was like $1,000 cash and some low interest rate at the time.
Don't remember, but possible.
Yeah, it was recent.
Was it?
Last year.
Okay. But sometimes I find too, I used to be a bank manager. The bank's going to offer a higher rate. And then if someone tells them they're going to a broker, then the bank might match that rate. And sometimes the customer stays there too. So
it was the RCMP client.
Okay, gotcha.
I hope he's listening because he'll know exactly what I'm talking about.
Throw you in jail for breach of privacy. Wasn't me, sir.
I hope he's a good friend. When someone's thinking about the home buying their first home.
Yeah.
What I always say is the first step. How early should they get in touch with you or their bank? Like, should it be a few months out or right before they're writing an offer?
Oh no, man. Whatever. Like if like I said, we talked about that earlier though. I year, 2 years, whatever works. If they're planners, some people have their lives planned out month by month for the next 10 years. To each his own. So
now,
but see, people, it's real hard for a single person just starting out in the workforce, making 40, 50 grand a year to buy a house on their own. They don't qualify for much, right? So
that makes
and
makes sense.
I get a lot of young buyers that come to me now making 40, 50, and they qualify for 210 or 185, and in this market in Halifax, there's no properties for them, right? So, and I just tell them the story. Listen, I was 27. I was a bank manager before I bought my first house, so don't feel bad. Like, you're doing great. So
yeah.
But it's hard. Like I said, it's hard for a single buyer. So
yeah, it's not the greatest market right now for buyers in general.
No.
Everything's going over at least at asking.
Interesting market for sure. So
I guess before I go, before we go, the last question I've got is for investment properties, because it comes up a lot. A lot of people think it's a great time to invest in something, whether it's an Airbnb or a long-term investment strategy.
Yeah.
What do you need to qualify for an investment property? Is it different than a typical mortgage?
Yeah, well, investment properties they're case by case. The property's looked at, depending on if you have other investment properties too, like rental properties, what your net worth is. Do you have liquidity? How many doors do you have in total?
Yeah. And
you say Airbnb, no lenders want to finance a property for Airbnb.
No way.
Never. Don't say that word ever. No. They're going to buy it. Airbnb is not good.
Oh, I didn't know that.
Yeah. No.
Why is it not good?
I don't know.
Okay.
None of the lenders want to be financing that.
It's
more or less a hotel.
Yeah. Yeah, it's more or less a single room hotel. Okay. You need 20% down for an investment property, don't you? If you're not living in it.
If you're buying a rental property, you need 20% down.
Okay. Yeah. If you don't plan on living in it.
No, exactly.
Now, Andy and I are planning on buying our first house pretty soon, actually. When we buy our first house, how long do we have to stay in that house before we can buy our second one at 5% down again?
There's no set rule.
Okay.
But if you buy a house for, $250, say your first one, or $300, say whatever it might be, or a good starter home. The way the market's going in Halifax, $300 might not get you a starter home soon. So
it might not get me a good starter home anyway.
That's right. Anyway, so you buy your house, and then everything's going great. In a year's time, you guys find a bigger, fancier house. You can go buy that one with 5% down.
Okay. So there's no set limit.
No, there's no set limit.
Okay. Is there any, before we go, are there any tips you can give anyone out that might be listening about a mortgage or financing and something to help them?
No, not really. But listen, if you got some savings and you got a good job, I would do some fact finding. Call your bank, call your mortgage broker, call whoever you know. Call me if you want. But honestly, just have a chat about it. This is a great time to buy a house. Your interest rates are at historic lows right now.
Yeah. So it's a great time to get into the market.
Oh, it is. Yeah.
Well, if you can find something.
Well, it's your job. I'm just from the finance side and the money side. It's like I said, if you got savings though, I think real estate's the way to go. So, and remember, when you're renting, you're $1,200 a month. All of it goes to your landlord's equity, not yours.
Yeah, that is so true. A lot of people don't understand that, like, that $1,200 over 12 months is suddenly. I can't do math in my head right now.
Well, that's when I get into people too. They're like, well, the CMHC fee, when you break it down per month, it's $50, and the interest on my mortgage is $600. I'm like, okay, and your payment's $1,200, and right now you're paying $1,200 in rent, and that's all going to someone else's pocket, not yours. So
I always break it down like equity like this. Just like take the first year.
Yeah.
And when you're renting for that 1 year, let's just say the rent's $1,000 a month, so that you're losing $12,000. If you do your down payment and you're paying $1,000 a month, let's just say your down payment on a $200,000 home is $10,000. So $10,000 goes straight in the equity. That means you own $10,000 and that you owe the bank $190. You go for a year of making your mortgage payments at $1,000. That's $12,000 off. So equity is now $22,000 and you owe the bank.
Well, it wouldn't all be equity though, right? Because some of that would be principal, some of it would be interest.
Yeah. Okay.
But
fair.
it's also appreciating too, though. So your numbers are probably somewhat close.
Somewhat, yeah.
And but even if it's not that much, so
ballpark.
Even if your $12,000 in payments of $6,000 went to principal and $6,000 went to interest, you're still $6,000 more to the good than you were when you were renting.
Yeah, and that's exactly it.
It's like a big piggy bank, right? Just keep on, more payments you make, the more equity you're going to have for down the road.
Yeah, and the more when you sell in like a few years to buy that next house and make your next move, you're going to make that back.
Absolutely.
What you pay off.
Yep. As
long as the market is as where it's going, you'll make a greater return.
Yeah, but you're going to pay a whole bunch more for your next one too.
Yeah.
We'll worry about that then, though.
Yeah, we'll take care of it then. All right, man. Thank you so much for coming on. It's been an absolute pleasure.
All right, thanks.
All right, bye, Brad. Thank you so much for tuning into the show. If you want to get in touch with Brad, you can reach him at 902-880-5257 or Brad Wadden at bradwadden.com. And if you want to get in touch with me, you can reach me at 902-220-7357 or jason.paul@kw.com. Thank you. Bye.